Hello, my name is Steve Bigelow with the Candlestick Forum. Want to illustrate one of the strongest trend indicators you're going to come across, and that's the T-line. As we can see, every time there's been a strong bullish day in the indexes, even though it's a strong bullish day, it's usually not a reversal signal, and it doesn't close above the T-line. Today, traded up above the T-line and closed just below it. Now, that would usually indicate some good strength coming back into the market. However, the probabilities remain extremely strong, but as long as you don't see a close above the T-line, you're still in a downtrend, especially when you don't see a candlestick reversal signal. Notice this is not a signal. It's not a bullish engulfing signal. It's not a bullish harami. It's just an up day and a downtrend. So same scenario here on the NASDAQ. A strong bullish day, bullish engulfing signal, but did not close above the T-line. Today you had a strong bullish day, but they couldn't close it above the T-line. Now, that doesn't necessarily mean we won't have a up move. But what that usually indicates is whatever the bullish up move might be, it's not going to be as forceful as if this had been an actual candlestick reversal signal. So we're not in an uptrend yet. That means you want to stay predominantly short. However, there are still sectors that were showing a lot of good signals and patterns. We can see AG, one of the gold stocks, coming up off a kicker signal and bullish confirmation. Now, this is where you can use the additional confirmation of the underlying commodity in a sector. For example, the December gold contract, you can see, did a morning star signal, a close above the T-line, never could close back below the T-line, and continued this uptrend. That just enhances the probabilities that you could be buying the stocks in that sector, showing additional strength. That same scenario can be used on crude oil. Look at your bullish harami telling you the selling had stopped. This is one of the 12 major signals in the oversold area. They gap it up and close it above the T-line. Looks doubtful, but today's positive trading is a good indication that this uptrend is continuing. That means the the oil stocks like Apache did a bullish flutter kicker, a best friend signal, implies more upside. A bunch of them. ConocoPhillips, bullish engulfing, best friend gap up, an island reversal. Notice you can draw a line right around this trading here. Gives you an island. Island reversal is usually a very strong reversal signal. The fact that they did a best friend signal additionally gapping up tells you the uptrend is likely to be in progress. So every time we can see candlestick signals and patterns and trading above the T-line, look how the best friend signal not only traded above the T-line, but gapped up above the T-line, telling you there is a lot of probabilities the oil stocks are going higher. Anytime you see a buy signal and a close above the T-line, start watching for that change of investor sentiment that has extremely high probability factor that things are going to trade higher. So this is where you use the T-line to identify bullish trades, as well as identifying what the overall market conditions are telling us. So logically, if we see a very lower open and they trade lower tomorrow, that's a good assumption that the downtrend remains in progress. The T-line produces extremely high probability analysis in conjunction with candlestick signals. Think of the definition. If the T-line acts like a natural support and resistance level of human nature, and candlestick signals show the graphic depiction of what investor sentiment is doing, when you combine those two, you've got an extremely powerful trend indicator. Join us in the Candlestick Forum chat rooms. This is where you can get the analysis and the learning of candlestick signals and patterns much more quickly, with everybody helping each other identifying the good, strong signals and patterns. That'll be it. We'll see you in the chat rooms.